What's going on, everybody? London Boys here with another YouTube video. This one is going to be on the order block. This is a concept that we use a lot in our trading. So we wanted to make a quick video just to give you guys the basics on how to identify what an order block is, how to use them as far as identifying the trend for entry purposes, where to put your stop losses, and things like that. So hopefully this video will be very helpful for you guys. Make sure you guys hit the like button, subscribe, turn those notifications on, because we're going to be dropping a lot more educational and helpful videos like this one. So any questions you guys have, you could drop them in the comment section below, or you can hit us up on Instagram at London Boys Official. I wrote it over here on the screen. You can hit us with a DM. Make sure to follow us. We're dropping charts on there, whole bunch of value and stuff like that for the community. So it's going to be great. So let's just get started. This video, like I mentioned, is going to be on the order block. So for those that don't know, I know a lot of you guys are very familiar with our trading, and a lot of you guys are very, very well versed yourselves. So this video is just going to really be on the basics of the order block. And so let's just get right into it, right? So as we see here, we got the British pound on the screen, this GBP USD. And as we can see, we are clearly in an uptrend. For the past few months, we have a little range-bound market here, price retraces down, and then we got a nice uptrend going on here. So I'm going to focus on this bullish uptrend to give you guys an idea on how to spot your order blocks and how to use them on all different types of time frames. Right now we're on a daily chart. I'll drop down to the 1 hour. Really, this concept applies to any time frame, so don't really worry about that. A lot of people, I get that question a lot of, is it valid on a 1 hour or on a 5 minute, on a 15 minute? Really, there's order blocks on every time frame. It's just how the chart moves. I'm just gonna break it down to you guys on how to really identify the most important, because you're gonna look at, once I explain it to you, you're gonna think like, you're gonna look at any candle, any down candle in an uptrend as, oh, there's an order block here, order block there. But really, there's certain specific levels that you guys want to focus on, certain high probability order blocks that you want to look for, not just any down candle in an uptrend. So we're gonna help you guys look at that. So let's just get into it. Let's look at this last recent uptrend right here. So as you can see, price was in a range for a little while. We got this big explosive move from back here in March. We got a big explosive move to the upside, and then just a lot of sideways movement up and down in the range. And just to give you guys some insight, this is your order block from the beginning of the trend. As you can see, price came down, traded into this last down candle before this big explosive move, and then we hit that consolidation. So you might want to ask yourself, what is it about these down candles in an uptrend, or these up candles in a downtrend? What makes them so significant? Well, as we know, we as regular traders, we don't move the market. What moves the market? Of course, big banks and institutions, the central banks. So really, the idea behind what an order block is that all throughout, as we know, that banks have unlimited amount of money. Their pockets are way deeper than ours. They can buy when the market's dropping. They can sell when the market's going up. And really, that's what they do. They hedge their positions, right? So as the premise behind the order block is basically that this last down candle is where the banks and the central banks were placing their buy orders. This candle right here, you could say this one and this last down candle was really where the banks were putting in their buy orders to really move this market to get it to go to the upside. So they're the ones that are moving the market. This market is completely, controlled by, central banks and large institutions. So of course, when they're placing their buy orders, of course, the market's going to go up. But the idea is that they're placing their buys within this down candle. And while price is dropping here, while price is looking to go bearish here, they're placing their buys. And that's really what's making the market go up. Okay. And So basically in an uptrend, you want to see these down candles getting respected and eventually seeing, bullish candles getting traded through. Now, why do you want to see these down candles being respected? Because of course, if the large banks are placing their buy orders here, they're not going to want to let price come below this candle, or else it's going to theoretically hit their stop loss, right? So they're not going to let this. Let me just, if you guys can see it here, let me make this line a little bit thicker. But yeah, so they're not going to want to let their stop loss get hit. Of course, the large banks and the people that move this market, they don't lose, or they don't have the pockets to lose. They're not going to let this market go any further below this candle. So this is the reason why you want to see these down candles being respected. Now let's move into more recent price action here. After this consolidation, we got a little false breakout here, and let's see how this uptrend moves. So we got this swing low here, small little retracement. Notice how these down candles are not really much of an explosive move, just a bunch of small down candles. And we want to box off the last down candle before this explosive move. So really, you want to look at this swing low. We got a large bullish candle here. So we want to turn our attention immediately to the last down candle, which would be here on a daily time frame. Now, the fact that this bullish candle traded through aggressively and closed above all of these bear candles obviously shows that the market is being controlled by the bulls. The market is bullish. So large banks, brought the price up. So we're going to take our attention to this last down candle of this swing low. Now, of course, if we see a big explosive candle like this, we have our order block here. We don't want to see price come below this order block. Let me put a red line again. Right? If price is truly, truly bullish, if we want to seek more higher prices, price should not come below this down candle. Why? Well, like I just explained, the banks are not going to let price come below their buy orders, right? Their buy orders are sitting all within this down move. Okay, all this little retracement these last 3 days, their big banks are buying. And then as you can see, the response to their buying is this large up candle, this big explosive move. We have a retracement down, right back into, as you guys can see, this last down candle. We get a nice wick, close above. Beautiful, beautiful response right there. That's really what you want to see. And then the next day, we get a bullish day, and off we go to the races. Now, this is something that's very helpful, especially on a higher time frame, on a daily chart, as well as weekly and monthly. This is really going to help you identify the trend of the market, the long-term trend of the market. As you can see, price went bullish here for about like 2 weeks of straight bullish, right? Price was seeking liquidity here to the upside. So knowing this and seeing this on a higher time frame, now we can drop down to our lower time frames and try to find our entry. So this is something here to help you identify the trend of the market, where the market's going to be going most likely for the long term, and we can drop down to our lower time frames to try to get in sync with the market, try to catch these moves to the upside. So here we have our boxed off range, which is this is our daily order block here, this gray zone. As you can see, price taps the top of the zone, gives you a small retracement, and off to the races. Now, how are we going to find our entry? Okay. Now I drop down to the 1 hour time frame, and like I mentioned, guys, I could really go on any time frame. It really doesn't matter. I'm just using the 1 hour. I like the 1 hour especially for intraday, short-term basis, as far as identifying the trend. As you can see here, a clean uptrend. You got consistent higher lows, higher highs, and it's just a very good time frame for an intraday basis. So we're going to drop down to the 1 hour time frame here, and here's something I want to show you guys. So this is our range from our daily order block. I'm just going to take this off real quick. This red line being the bottom of that candle. So we definitely don't want to see, look how the price just sitting here as a clean support, right? We don't want to see this support right here broken. And so we can now look for order blocks on our lower time frame. So really help us get in sync with the market, get in sync with the institutional trend, the higher time frame trend, to really capitalize on these large moves. So I can box off this candle right here. Now notice how you have one bear candle, two bear candles, right? Two consecutive bear candles, and then a big price move up. When you see, consecutive candles in a row, you can really just use the whole range of that candle. You can use the high to the low, really, because if we're looking at a higher time frame, a 2-hour chart or a 4-hour chart, this would be one order block. So it's really the same thing. You want to just box off both candles, this whole range, and look at the immediate response from price. This is going to show me that price is truly bullish, right? We're not breaking below these down candles. Had price broken and closed below here, I'd say they're probably going to want to break the support and look for the liquidity down there. But the fact that price gave a nice response, a nice bullish candle, a wick to the downside showing rejection that doesn't want to go below there, and we come here. We get a nice bullish response. And really, I'm going to just show you guys just this whole trend was really, really clean as far as looking at your order blocks. Let's see here. Let's use this line right here. Actually, I'm going to box this candle off. Look, we got this candle here. Price move up. Again, you want to understand that price needs to move aggressively, impulsively above this bearish retracement right here, close above, and now that validates this as your order block. Okay? You want to see price trade above it and close above it. And then we could turn our attention to the last down candle. Now we have both candles here. As you can see, this large candle trades through the top here. So we would definitely turn our attention to this candle where we would box it off. And then you see here a nice rejection, a nice wick rejection, another small retracement right here, and then we get our bullish response. So really, anywhere within this range, already understanding your higher time frame buys, right? We were just on the daily chart. We identified, a daily order block that was respected, that was wicked through. Price failed to break the down candle, and it traded above. So we already have our higher time frame analysis in place where we're expecting price to go higher, at least for a week or two, right? Or a couple of days based on a daily chart. So understanding that, we just want to get in tune with the trend. We're not going to try to fight the trend, right? As far as the higher time frame, we already know the big banks bought up that last down candle. We know that. Why? Because they traded to it and they failed to break below it. So that's just confirming our bullish bias. Now we can just get in tune here with institutional order flow, really, right? The banks are taking price higher. So really you see a rejection right here of this order block. This is a good buying opportunity. You can buy this. Listen, if it really all depends on you and your experience as a trader, right? Some people are going to get in at this beautiful wick here with little to no drawdown. Some people want to wait for a bullish response, which is totally fine, right? You get that bullish response here, and you can really just buy this next candle, because as you can see, let me take this box off. Now we have this small little order block, and if I just put a line at the body of it, because that's the most sensitive part, would be your body, right? Your opening of the candle. And look how price just wicks into it again. So you could just, using your analysis already of being bullish, you see price come in there, you buy. Where does your stop loss go? Your stop loss would go underneath the down candle, right here. And I mean, the precision, guys, is amazing. I mean, this is a, reasonable stop loss of 20 pips for, if you're swinging this, a potential huge gain, right? 100, 200, 300 pips. So that's something that you want to see for entry purposes. Your daily is looking at your bias, your long-term trend, and then you're going to go down to the shorter time frames, the smaller time frames, and really zone in on your entry. We got another same thing here. If I put another line here, I mean, this is really clean. So I'm just going to go down all these order blocks. Look, we got this little down candle here, traded through very small, and look at the response. Big aggressive move. I could put another line here at this body. Right, you guys can see the lines. I got to make them a little thicker. Now you can see, right? This line here, right at this body of this candle, price trades to it and response. You can put another one here, boom. Price trades to it and responds to the upside. Right? Everybody see that? It's pretty clear. So this is just a great trending market that you want to see. Of course, price over here is going to trade down a little bit, grab some stops that are resting here, come back, and really what they wanted to do is trade again into this order block. And like I mentioned before, when you see these consecutive down candles, 1, 2, 3, 4, right? We're on a 1 hour chart. So if you see 4 down candles consecutively, what do you think? That's basically a 4 hour order block, right? Because price is price. On no matter what the time frame is, this is how price is going to move. So it really doesn't matter what time frame we look at. But understanding this and seeing that this is a potential 4 hour order block is a more significant, more stronger level, being that it's a higher time frame, and price is going to want to trade to that and more likely respect a 4 hour order block as opposed to a 15-minute, a 5-minute, or a 1 hour or something like that, right? As well as a daily. So keep that in mind. And that goes back to giving you guys these high probability order blocks where it's not like, okay, you have a down candle here, a down candle here, and a down candle here. And, you know, these all may look like order blocks, but really, you know, price is going to retrace, right? Price is not just going to keep bouncing off each candle and going up, 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 up. It's not always like that. So, of course, price is going to retrace a little bit, grab some liquidity. And what makes this order block high probability is not only being on a 4 hour time frame, on a larger time frame, but the fact that we got some clean support here. Price is going to want to grab, you know, of course, people are trailing their stop losses below these lows as well as below these lows here. So the market is going to retrace and grab that liquidity. So you want to really focus on, you know, the higher time frame is, of course, the better, but there's a way to utilize your lower time frames based on your higher time frame, just like we did here. Right? We identified our daily order block. Now we can identify our 1 hour order block. It makes it easier that way. You always want to pay attention to a higher time frame to really see where the banks are moving. So, and price just keeps going. And then understanding as well, you know, where the liquidity is resting. That's probably for another video. This one, I really want to just zone in on the order block and really the basics, get you guys up to date. So another thing I want to mention about these order blocks, as you can see here, so the sensitive areas, right? Really the sensitive area would be from the high to the body, from the high to the open is a real sensitive area, but as well as the midpoint. The midpoint of the order block is something that's very sensitive as well. Sometimes you may see price trade through the body, through the open, and you're probably thinking, oh man, price wants to just drop below. It may break through this order block, but you also want to turn your attention to the midway point. How do you do that? As you can see, I drew my fib here from the body of the candle, the open to the close, not the wick, just focus on the body. And you have a 50% range. As you can see here, price tapped right into the 50% range on our fib and gave a nice rejection. And then the following candle hits the body of hits the open and then continues the bullish trend. So this is just a real deep retracement into the midway point of this candle. and then we get our move to the upside. So that's something that you want to keep in mind as well. The midpoint of the candle is something that's very likely to be traded to, so you want to keep that in mind as well. And this is really how you're gonna identify your order flow, guys, because clearly this is just, you know, even the most simplest of traders can see, you know, clearly an uptrend, right? Higher highs, higher lows, and all of that good stuff. So again, I'll drop down to a 15-minute time frame, and then I'm gonna go to another chart showing you guys. I could show you guys on this one too, the reversal for a bearish one, but I want to give you guys a couple examples because, you know, people always ask, oh, does it work on this? You know, does it work on commodities? Does it work on crypto? And really, guys, any type of chart, this is how price moves. This is how price moves. You know, the big banks are the ones that are moving this market, and when you keep that in mind of, you know, the concept of they're buying when the market is dropping, and they don't want the market to go below those last down candles. That's really the premise behind these order blocks. So as you can see, you know, the lower the time frame you go, of course, it's not going to be, you know, there's going to be more down candles to look at. So they're not all going to be reliable, of course. Again, you want to focus on your, you know, if you see a swing low, a 3-candle pattern, you know, like a morning star for those that trade candlestick patterns and things like that, you know, those are real high probability, right? Order blocks at a swing low, as you can see, like right here, we have 1, 2, 3, a nice swing in price. So these type of order blocks are real reliable for the most part in a bullish market, because, you know, you got that swing low pattern, which is definitely helpful. And as you can see, price didn't even come down here. It just traded into these two small little candles, these order blocks right here. If I put a line here, boom, that is your, and as you can see this time, 8:30 a.m., New York session. This is a beautiful trade entry right here. This would be a great example of how to enter the trade, how to get in tune with the trend. You wait for that retracement down into your order block. You buy it up here, put your stop loss below this candle. Below this, I would put it below this swing low, because you never know, price would want to come down here and maybe test these order blocks. So I would definitely put my stop loss below this order block here, which, I mean, if you enter there, we're talking about, again, 20 pip stop loss, very reasonable for a potential reward of, you know, definitely double 100 pips. So we're talking about 1 to 5 easily, right? The risk to reward is amazing, understanding this concept, guys. So this is why I wanted to make this video, to really explain to you guys how, you know, this is something that we use in our trading a lot. This is like one of the foundations of our trading, and it's very powerful, very great way to look at the market. So let's give you guys another example. Let's go to a bearish market. We got dollar CAD was bearish for a while recently. So let me go back to a daily chart, start you guys from the top again, and let's really break it down. So we got this significant high here. Price made a failure swing, failing to break those highs. Another fail swing here of a swing high. So now, again, your high probability order blocks are going to be at swing highs, swing lows, order blocks, you know, resting below liquidity in the form of like clean lows, clean support. If you see like a clean support and then an order block below that, that's a very high probability. So we have a swing high here. We got 1, 2, 3. Price swung and gave a nice move to the downside. So we're going to turn our attention to this candle within this range. Again, you just box off this candle, guys, right? Because this is where large banks are placing their sell orders. And it may take time for a big explosive move, right? So look, like, you know, this is a great intraday trade right here. This down move right here is great intraday. We're mainly intraday traders, short term. We swing a little bit as well. So really, like, there's all types of styles of traders, which is, this concept is going to help you no matter what you like to do. If you like to swing, if you like to scalp short term, whatever it is that fits you guys, there's nothing wrong. This is going to help you no matter what. So we're on a daily time frame again. We're boxing off this last up candle within this swing high. And as you can see, just drag it across and look how price comes into it, taps into this order block and drops again. Look at this big aggressive drop, big bearish engulfing candle, takes out this whole bullish run and fails to break this low one more time. Again, price was just ranging. But as you can see, as we keep our zone here, price comes up and never breaks above our zone, right? This is a real resistance zone. Based on your analysis, based on this high here, that failed to break that high, come back, failed to break this high again, right? Real simple stuff, guys. Just anticipating this bear market, right? We have our order block boxed off, and just look at the respect of this range. I mean, it's beautiful. It's beautiful. So, and then this is just gonna help, and then we can box off this candle here. Once it comes and rejects, gives us one last bullish candle, and then a drop. Now this drop right here confirms we have an order block here at this candle. Now we can box this off. Now remember I said your real sensitive points are your body, the low of the candle to the body, or the high of the candle to the body, right? The wick to the open. This is going to be a real sensitive zone. As you can see, price trades in through right here. Doesn't even hit the body. Doesn't always have to trade to the body. Doesn't always have to trade to the midway point. This is your first sensitive part of your order block where you may want to see rejection. So we get that here, nice rejection, small little candle, and then boom. Beautiful, beautiful, aggressive move to the downside, impulsive. Look at this candle. Look at this bear candle compared to these two bull candles, right? Can't even match it. Doesn't even compare. This is just a real impulsive move. And then again, very, very small candles shows how strong this trend is to the downside. And then another big aggressive candle, boom, right? And then price just keeps dropping. So really all within this range, the big banks, central banks are just building up their sells, right? That's what they're doing, especially within this range. So price comes up, they're selling some more. Price comes up, they're selling some more. That's the idea, guys, right? They're just building up their orders. There's a bunch of buyers here. These big bull candles are sucking in a lot of buyers, but they're failing to break the high. That's what you got to keep in mind, right? We got this high here that, again, traded into this order block, right? I'm just showing you this move down to the real aggressive move that finally breaks the range. But this high here from this order block has been respected all throughout this range, which should tell us something, which should tell us that a big move may be coming, more likely to the downside than the upside, right? Again, that's your daily, and we could drop down to the 1 hour again, and let's go back to the top of this trend and really show you. I mean, look, this is beautiful, beautiful, beautiful stuff, right? Beautiful price action, lower highs, doesn't make the lower lows yet until here, boom. Look how aggressive when they finally ready to go, I mean, just look how price just tanks, right? And just really wipes out these lows. Anybody that was long here, this would have been a nice short-term trade, but if you're not taking your profits at logical levels and you're just trailing your stop or you're leaving your stop at the previous low, market is just going to eat it up. Eat it up, guys. I mean, that's really what it comes down to. So when you see something like this, again, guys, look, consecutive bull candles, right? Consecutive bull candles. So it doesn't necessarily have to trade to this highest high one. As you can see, I mean, it already traded to it right here, gave a nice response. So when you see market structure was broken right here, which is what we have with this zone, we have clean market structure break to the downside, another consolidation zone, retracement back up. We have this zone right here, which also is our daily order block, as you can see, the zone was already marked off based on the higher time frame, right? That's why these higher time frame levels, these higher time frame order blocks are the key, guys. If you don't have the higher time frame order block, the lower time frame really doesn't mean anything, right? It's not going to help you unless you have that larger time frame perspective to now go down to the smaller time frame and really zone in on your entry techniques, being able to place very, very tight stop losses, reduce your risk as much as possible and really maximize your gain. That's really the objective here, guys. So we got this break of structure, retracement back into it, also a daily order block. And then, the session that you're trading is always important. This is the New York session, 10 a.m. for us. We're here in New York as well. So this is our New York session, 10 a.m. Eastern time, which is a great time. Is also the London close. So London close going into New York, a great time to catch an entry, hit your significant level, and look at the drop. All right, so let's go down to our 15-minute and even down to the 5-minute. I mean, this is the smaller you go. Once you understand the higher time frame perspective, you can really go down to the 5-minute, even down to the 1 minute, based on of course your experience and skill level, and really hone down in on your entries, guys. Like this can really, it really gets precise when you look at it. So we have a high here, and you always, anytime you see a high taken out, that's always a great understanding in a bearish market. Seeing a previous high get taken out is always a good time to look for an entry. And really, anywhere within this zone, guys, you got this last down candle right here. You can box this off, boom, trades right into it. That's a good entry right there. Stop loss goes above this high. Where is that? Like probably 10 pips. I mean, look at this, 10, 15 pips stop loss, guys, right? You don't have to catch this high of this wick. I mean, it's great, of course, understanding and getting your confidence up. You're going to be entering over here at the high, right? At the tip of the wick. Once you get that confidence and that understanding of the concept, right? And really seeing these order blocks and understanding market structure, you'll be able to get in up here. But even if you don't, and you want to wait for a response, which I completely understand, right? A lot of new traders, they want to see that response first. They want to see, here, this candle. They want to see this. And then they'll look for an entry, right? Nothing wrong with that. Again, you got this little bull candle right here. We're on our 15-minute time frame now. Price trades through it. One little wick above, if you guys can see that there. If I gotta, I'll just take this off real quick. This is the candle that I'm boxing. And boom, as soon as it trades up into there, you can enter anywhere within that range. Stop loss goes above that high, and you're off to the races. I mean, look at this trade, guys, right? And really doesn't stop. So if you're a swing trader, this is great. Like I said, if you, really any type of trader, scalper, if you want to take your profits right there at the previous low, or if you're looking to hold this trade long term, and there's, once we get this market structure break, now we can just look for, multiple entries on a daily basis, right? Just understanding what order blocks to look for, on a 1 hour, on a 4 hour time frame, and really just capitalize on this big down move right here. So that's the premise behind the order block, guys. In a down market, in a bearish market, you want to see the bullish candles, the highest bullish candles that get traded through. That's where banks are selling the market. That's the reason why the market is dropping. And you want to look for price to trade into that, reject off of it, and then you're going to look for your entries on the lower time frame. So hopefully this is very helpful for you guys. I'm going to look at one more market. Let's look at Bitcoin real quick, because I know, people, like I said earlier, we get that question a lot. Hey, does this work on crypto? Does this work on this? And I'm telling you guys, it works on any market, right? I'll run through crypto real quick. Let's go, it doesn't really matter, right? Daily, 4 hour, whatever you want me to look at. Let's see here. right? Let's look at this uptrend here on Bitcoin that we had. And, you know, I was one of those people when I first started learning this too that, I wasn't really sure about because I like to trade the crypto market, right? But I wasn't really sure. I'm like, does this stuff work? Crypto is super volatile. Like, does it move the same? I mean, of course, the volatility is different. The pip count is different, but, you know, it's the same as this. Like I said, this is how price moves, guys. No matter what market you're trading, stocks, futures or whatever, this is really what the market's gonna do. I got this down candle right here, gets traded through with this big bullish candle. One more retracement back down into it, doesn't break below. Look at the response. Look at the response. I mean, beautiful, beautiful bullish action. Of course, price is gonna retrace, creates another. Again, your high probability order blocks are important, guys. Don't just look at this down candle. Wow, this is a down candle, but it's at the top of the uptrend, essentially, right? I mean, so it'd be great to turn your attention to it, but understanding that more than likely price is going to want to retest this market structure that it broke out of, which is what it does with this long wick. When market structure breaks like that, I mean, almost all the time they're going to retrace, at least tap back into market structure to really continue their trend. So you always want to keep that in mind, guys, as far as your high probability. So look, once price taps into market structure, we get another swing low right here, another 4-hour swing low. Look at this impulsive candle. So that's another thing. Like, you want to see these candles traded through aggressively. Like this candle, yes, it's a bullish candle here. You guys can see where I'm highlighting. Yeah, this is a bullish candle right here, but how aggressive is it? Not very much, right? Not really that aggressive. So this aggressive move right here is really a great example of a high probability order block situation. And of course, this is where patience is going to come in, guys. Patience. We're on a 4-hour chart. The patience to let price come back into this zone and then buy it up again, right? And all throughout this trend, I mean, I can identify multiple order blocks. And then even over here, within this consolidation, let's look at this. We got this down candle here. And if I just place a line at the body, look at price respecting this down candle, right? We got higher highs, higher lows, not so much higher highs because we're within this range, but price kind of broke out of that range, give us our last down candle, and now just look at the respect, guys. So many buying opportunities right within this range. This is a 4-hour chart, so really price gives you about a day or two to place an entry here, and your stop loss would go below this candle, and look at the aggressive move. So it works on any market, guys. One more time real quick, let's look at gold. I know a lot of people, I love to trade gold as well, and again, doesn't really matter the time frame, 1 hour, 4 hour. Let's look at this last recent uptrend. We got this swing in price, box off this candle. Remember, the last down candle after price has closed above it, right? After price has traded up, closed above this candle, one more retracement, boom, into this body, and then look at the continuation. Look at the continuation, right? Even during high volatility events such as news, this candle right here, if you see, this was 2 p.m. Eastern time. This was FOMC this past week. And really, some people say, oh, don't trade. We don't recommend to trade news, right? But the fact that people say, news is random or news can just go do anything in the market is really, that opinion is false, guys, right? We're here to tell you guys the markets are not random. The markets, just because of news events or Trump tweets or whatever it is, that's not the reason why the market's moving. The market is engineered to move a certain way and respond off of certain levels. So as you see here, even with the news event, yeah, look at this long wick, right? Took out a bunch of stops within this range. And this is another example of a very high probability order block. Why? Because it's resting below a range. As you can see here, we got a consolidation range, very small candles, nothing really big and impulsive, right? We got a little fake out here to the upside, a fake move. Price comes back down, takes everybody stops out. There's so many people that want to think about it, guys. There's so many people that want to get long within this range. Why? Because they see, the recent uptrend, they got their trend lines on, the higher highs, higher lows, all that stuff. And they just want to get into them with the market. So they're going to get in somewhere within this range, and price is going to come down and stop everybody out and then trade into this order block, which is what makes it such high probability. This is a great example of a high probability order block because it's resting below a consolidation range where, the banks are just accumulating orders really to just stop everybody out and then take the market, to continue the trend. So if you're buying, this is why, we always like to wait when markets in a consolidation is when you want to sit on your hands and really wait to see a response, wait to see what market does, whether it breaks out and retests or, gives you a failure swing, a false swing like this. Things like this is what you want to see out of consolidation ranges, And so this is a great example of a high probability order block resting below a range. Why? There's so many stops below this range, guys, that you want to wait for the market to stop everybody else out and then get in, right? You don't want to be the one getting stopped out here, right? Because there's so many people, it's so obvious. It's so obvious, support level, prices in a range. And could this market break out to the upside? Yeah, I mean, of course, you've seen it, but it's very likely that price is going to want to grab liquidity before it moves in the intended direction. So hopefully this video was helpful for you guys. This is really just, a breakdown of the basics of order blocks, of, finding the trend, finding your entries, and all of that stuff. So if this video was helpful for you guys, make sure you guys drop a like, comment any questions. Is there anything that you want us to go over in further detail? And it was really great making this video with you guys. So be on the lookout for the next one. Have those notifications turned on. And I'll see you guys in our next video, man. Thanks. Thank you, guys.